All right, we've been talking a lot about the VIX and the TVIX, but let's look at the actual VIX index here. First of all, start with the daily, and then we're gonna creep on out. But we've been contracting quite a bit down here at the lows, with the lows for the year down around the 1335, and we've been down into the 15s with a couple to mark 13, 913s, and 9s. But the dangerous side, the risk, if you will, is on being short volatility at this point. It's easy to make the argument when you have these crazy spikes up to the 48 as we had in the spring, in late summer, but now with this contraction going on really between this 15 and 22, 23 area, this is where you tend to see spikes in volatility. And let me bring up a couple other charts here that will help show this a little bit further. But the VIX, if you were to look at a weekly chart, you can start to see this a little bit more clearly. Every time in the past 3 years it kind of gets down into this 15 range. We've done this now. This is the third big push, and every time we've gotten down to this range, we tended to see spikes, although each one has been lower than the last one. This 48th, and we saw 45 in the spring, and it again looks like we're going to do it again. You can see this very clearly. The patient looks very sick on the VIX chart on a monthly. Again, going back 10 years, we had this post 9/11 time where we had almost 4 or 5 years of this real quiet, if you will, after the post 9/11, and then since then, the last half a dozen years, 5, 6 years, we've been having these spikes, and each spike has been muted a little bit more. But I still think there's going to be some more spikes coming, especially election year, possible. Middle East tensions continue to grow. So watch this VIX. The danger again is being short VIX at this point, not long. So make that part of your look when you're looking at the VIX right now and the overall market. The risk is not being volatility. It can really wipe out a good run that you've had, just like we've had over the last 3 months. It's been nice and easy for folks, and they've forgotten what volatility can do to the portfolio. So if you go up 2-3 fold from where we are, that can really destroy all the moves that you've had here in 3 months, and really no longer than a day to a week. So keep this in mind. VIX is in play, and to me, risk is to the upside, not to the downside right now.